Welcome, everyone. Good evening. My name is Nkem Chukwumerije. I'm the founder and CEO of Pheenyx Capital. Thank you for joining tonight's session. So yesterday and today, our team spent those 2 days, 48 hours on site at the park at Arlington in Covington, Georgia, our 188 unit multifamily apartment property that we have been evaluating. So we weren't just there taking pictures for maybe marketing material. We were there to verify every assumption that we made. We were there to test every projection and examine what's actually happening on ground. So tonight, I'm going to walk you through exactly what we did during that visit, what we found, and most importantly, what those findings mean for you as a potential investor, because I know a lot of you here are thinking about investing. So our job and our role is to convert those projections into proof. And that's what we went and that's what we did on site, because the truth is that your capital deserves more than just optimistic spreadsheets and really nice fancy decks, right? I want to take you behind the numbers. And so let's get started. But before we go on, I just want to take a moment to address something that's important, right? As accomplished professionals, you understand the value of due diligence in anything you do in your profession, even in personal life. And I want you to do the same with the information that I'm giving you here tonight, right? Even though I'm excited to share this, right, I encourage you to review it. You'll get the investment materials after the webinar. Take your time to review it, ask questions, reach out, I'd love to jump on a call with anyone. And then also reach out to some trusted advisors that you might have, because I would say that's what sophisticated investors do, right? They ask questions and they verify, just like we did in the last 48 hours. So let's talk about kind of what really matters tonight, which is due diligence. This is what we're going to cover. I'm going to start just really telling you briefly why due diligence is important, right? And especially as you're evaluating this real estate opportunity as a way to build wealth. And then I want to walk you through exactly the work that we did, what we completed yesterday and today. We did unit inspections. We looked at lease audit files. So every lease we audited. We did financial verifications. And then after that, right, I want to discuss what it means in terms of risk returns, and then, just how reliable that is in acquiring this asset. And then I want to open it up for questions. Please ask questions. If there's something that doesn't make sense about what we did, how we did, the thought process, feel free to ask questions. This is not theoretical at all. Everything I shared tonight is grounded in what we saw, what we touched, what we verified. And you'll see a lot of pictures, some of them not the greatest, but that's what we saw. And that will help us kind of plan what we do forward. So I want to be direct as to why we're having this conversation, right? If you're on this call and you're an executive, you're a physician, you're a high earning professional, and you're considering real estate investing, you've seen a lot of like really fancy investment decks, and they have all these like amazing projections, 25%, returns, all these IRR calculations, the perfect exit scenarios. They look good on paper, but those projections are not proof, right? And those models sometimes are not reality. And your capital, as you're thinking about investing, should not be deployed based on those assumptions alone, right? Due diligence is really the process that separates that speculation from really sound investment, right? It's where you go, and we go on your behalf and we verify what's promised on that deck. And I also want to say this, right? If any of you are in the area, or if you live in that area, you want to visit the property, reach out to someone from our team and we'll set it up. We can either set it up or you can go secret shop it like a tenant. So you have options to go check it out until we buy it. But the process of doing due diligence is where we want to protect your capital, because we're testing every claim even before you decide to commit $1. And that's why our team was there yesterday. That's why we finished the work today. And that's what tonight is all about. It's showing you evidence, just not just a pitch, right? Something more than that. So what is due diligence? I think about it as like a systematic verification of everything that matters to the performance of the property. So we are not just taking the seller's word, right? The seller has told us, the seller wants to make the numbers look pretty, and we're also not relying on third-party reports. We want to validate everything that we've seen. And so our job, all day yesterday, all day today, was to physically examine the asset. We went to every single unit. That's right, 188 of them. We went into them. And I'll tell you the numbers. We did 110 yesterday, and the rest was completed today. But We audited really all the financials, right? We did those in front of a computer screen because everything is now online, but we read through the leases. We talked to the people who ran the property every day. So the front desk staff, the maintenance team, and the maintenance team, the on-site current maintenance team are the people who walked us into every property. So imagine the maintenance guy with like a circle of like 188 keys. Yes, that happened. And he was opening every single door. But that's what we did. And then a small team from our big team went and secret shopped some comps in the area. And comps are just other apartments in the same area that are, that charge the same as we do, kind of the same vintage, so around the same year. And we went to go look at them, right? And I want you to think about this. And the reason why this is so important is that if you are buying a business or, maybe a medical practice, whatever that is, right, you wouldn't just look at revenue projections or where it can go, right? But you would want to verify everything. And that means that you want to understand the contracts. You want to review all of it. You want to assess what the staffing is like. You want to understand what's around. So like the competitive landscape, like who are you competing against? What businesses in the area are like yours? Like all of those things, or what practices are similar to yours in the area, right? You want proof. You just don't want promises. And so in real estate, right, is no different. Due diligence is really where, again, we start thinking about how we convert that assumption into verified fact. So any of the risks that we're concerned about, before they become a problem, we assess them, right? And in that, we build confidence that will allow you to invest. And we go there, and a lot of our what we call value add, so our renovation plan, we go there to make sure that it's what we wrote on paper comes to life, right? If we say we're going to renovate this at let's say we say the cost is maybe $8,500 to renovate one unit. Like if we go there, we'll see the quality of it. We'll see what type of countertops are there. What do we need to change? So that 85 that we assumed is that reality. So all of that is what we're doing when we go on site. Now, why this is important for you is that as professional investors, right, people like you work hard wherever you are, whatever you're doing. This process of due diligence is non-negotiable. It's the foundation for sound investing. So whether you invest with Pheenyx or someone else, right, you should be asking, are you doing due diligence? What did that process look like? What did you get from it? And again, please ask questions. So let's get into what we did yesterday and today. The whole team, the team made up of our property management team, contractors, our asset management team, all of us showed up on site. And this is what we spent all of yesterday, and the rest of the team spent all of today on the property as well. It was not a quick walkthrough. It was very comprehensive. And then we verified every step of the way. So we split up into teams, right? We had the teams that were doing the walkthrough. We had the teams that were verifying the contracts. We had the teams that were driving to look at comps. And then we had the teams that were interviewing the on-site staff. So that's kind of what it looked like. So first, again, right, it was the physical inspection. So we walked the units. I walked the units along with some of our investors who wanted to come to the property. So we walked occupied units, vacant units. We examined along with the contractors. We had 2 contractors on site yesterday and today. And so they examined kind of all the building systems. We looked at the common areas. We looked at parking lots. The things you don't think about, like what cars are in the parking lot, how many cars are in the parking lot, the time of the day, are they at work, are they in school, like all of those things are things that you don't think about, but that we are thinking about, right? We looked at the roofs. We also kind of checked for the big thing we're looking at is deferred maintenance. So are there things that they've pushed off that we probably should be doing? We're looking at the quality of the construction, kind of like how the mechanical systems are. We're looking at plumbing, really anything that will impact the operations or anything that will require us to spend additional capital. We need to be aware of that. And so yesterday, I told you we did 110 units yesterday, and the rest of it was done today. And so that was the breakdown. And we spent more time looking at the properties yesterday, the units yesterday, at least at a slower pace, because we wanted to verify things like the units that had washer dryer, right? Did the seller own them or did the tenants bring them? We were verifying all of that on paper. And I'll tell you more about the physical inspection, but those are the things that we did. So it took a little bit longer, but we were able to get to about 59%, which was about 110 units. Then the second part was financial verifications. And this was done on the computer. We looked at the rent rolls. Now, this is important, right? We matched the name, the rent against the actual leases. So what the seller gave us, we matched it. We also reviewed, like, so the trailing 12 months of expenses is called T12. We looked at that and we verified, like, what, making sure that all those reports matched what was actually happening. We looked at we needed to reconcile revenue. We looked at collections. So sometimes, right, like you might buy a property and you don't know that some tenants are actually going through collection, or that they're even delinquent and they're trying to get them to court to evict them. So all of those things were things that we need to make sure that we look at. So we had a team that was just behind the computer looking at that. We also need to make sure that rents aren't inflated. So like what the tenant is paying is actually what the seller said. All of these things are things that might not seem important, but are really important. And then the third part of the due diligence was like operational assessment. So spending time with the on-site team, so like as the maintenance crew is walking with the team, with the people who walk, like we were asking them questions. We spent time looking at like how the front desk staff interacted with residents, like how they handle maintenance requests, like all of those things, because like a happy tenant will stay. And a happy tenant is revenue, and revenue is cash flow for you as an investor. So that's why all of these things are really important. And I want you to be thinking about it, because we are thinking about it. And good management, like quality management, is like one of the biggest predictors of like performance. Like, will the tenant continue to stay? Will the property do well? And the last thing we looked at, and I'll walk through each of these in detail, but like we looked at market validation. So this we've done on paper, right? But we now went and we secret shopped it. So we drove the neighborhood. We looked at the comps, right, around. We also looked at what's in the area. So like employment opportunities. We looked at schools, stuff like grocery stores, like a Starbucks, a Chick-fil-A, like what's around the area. And I will tell you, right, this apartment is tucked away in the neighborhood. It's really cool. Like when you drive in, you think you're driving into a subdivision, and there's a subdivision on your left-hand side, and then you drive and you see the entrance to the apartment. So it really feels very homey. So I really like that. But all of that is I wouldn't know that, right, if I didn't drive the property yesterday and if we didn't look at it. But that's what due diligence looks like in practice, right? And so I've told you kind of high level those 4 areas. I want to break down those 4 areas with you. And so we started with the physical inspection. These pictures are from what we walked yesterday and what we examined. And some of them, like the pictures look bad, but like at the end of the day, it's like some of it is minimal work that needs to be done. But again, we did 110 units yesterday. There's one model unit. We didn't just look at that because that unit is pristine, but we looked at occupied units, and all the residents are made aware that we're coming. Like you get that sign that says we're under new management. And so we are new management, right? So we came in, so with their permission, they're aware. We looked at all the resident units, the ones that are lived in, the vacant units that are about to be turned. That means it's vacant and they're doing cleanup. It's called turnover. So we looked at those as well. And the goal is to see what conditions they all are in. And so we were checking like the appliances, stuff that you don't know. So like turn on the gas, make sure it's working, are the fridges on, is the HVAC, so AC, are those well maintained? So looking at that, like we looked at plumbing, that's also important, right? But depending on the age of the property, what type of plumbing is on site. But this property is 2001, so it's good plumbing system. But we kind of looked at that. We examined flooring in each unit. We looked at paint quality. Like we might have to paint while we own. So we looked at that, and we spent time looking at windows and door treatment. And one of the big things I will tell you is that we will improve some of the windows that have been on the property that need some work done. So I can tell you that some of our capital expenditure will go towards that. But again, the reason why we're doing this is we're thinking, are there any signs of maintenance that has been deferred? Because the longer you leave work that's not done, the worse it becomes. And so that's kind of why those were the big eyes for the crew that did the physical inspection. And I was part of that. So I did some of that. I did not do all 110 units, but I definitely walked the units with them to take a look at that. And, we have the main regional managers, they have apps on their phone and they just check off. So like there's a, a system of everything that we're looking at, and they just check it off. And so we had conversation. And like I said, we had 2 contractors that came out, and the big thing that they were doing is really examining the building system. So they looked at roof and age, because replacing a roof is a major expense. So we also looked at exterior siding, the structural elements, all of that, the parking lot, like what's the condition of the parking lot. We might have to like redo the parking lot towards the end of our business plan. We also looked like in the parking, it's asphalt cracking. So all of those things are things that we looked at. Any drainage issues, there weren't any, but like we looked at like, is the building well maintained, and is there like any neglect? All of that. We checked lighting. We looked at security systems. There's a security system on site, but we're thinking about changing that after that contract is over. We looked at landscaping, curb appeal. The property is gorgeous. It's called the Park at Arlington, and all the apartments surround like a park in the middle. It's so beautiful. And like this time of the year, the leaves are changing. It was like a really nice place to be. So this is kind of what matters, right? We weren't just looking at the problems. We saw some, but we wanted to really assess again what the culture is like on staff. We wanted to make sure that the team, when we're talking about the physical inspection, we wanted to make sure like maintenance is being done. We wanted to also make sure that small issues were being addressed, and you can tell based on what's been done so that it doesn't become a big issue. And then, so that was kind of the things. And the big thing about the walkthrough is like, is the property well maintained? That was a big question that we kept asking, because what happens is that the physical condition of the property is going to drive 3 main things. And this is important to you as an investor. And I kind of alluded to this, but it drives capital expenditure. So what are we spending our money on, right? The money that we have in reserves that we have raised for renovations and capital expenditure, making sure that the property is well maintained will decrease that. It also affects operational costs, so what we're doing on a daily basis, right? And so what the condition looks like today, if it's well maintained, it helps decrease that. And then also the physical look of the property. Residents want to drive into a place that they actually like to live in, right? That's important. You might not think that's important. That's very important. So how maintained it is. Like I'll tell you, with our team going kind of in and out, right? We had a hard time getting into the property because it's a gated community. So we couldn't get in. Like somebody had to open the gate for us every single time, but that's good, right? I felt safe. Like once you were in, like you couldn't get out, and you couldn't get out except you had the code or access. And even the small gate, like you needed to have access to be able to get in. So that made me feel really safe. So that's some things that like we don't think about, but it's important. So that was the physical inspection, right? Next was the financial. And, the big thing about financial verification is we follow where the money goes, right? So we picked a small team. Again, they're good with doing financials. And so they were just dedicated to looking at the financials, and they started with the rent roll. And it's really, when I talk about the rent roll, I want to make sure I'm saying things that you understand, but the rent roll is really just a list of every unit, every resident, what they're paying. That's the rent roll. So we matched that to the actual lease files that were on file, because we wanted to confirm, one, that the occupancy is real, and that it's not inflated, right? Because when you inflate the rent, your income gets inflated, right? And so the net operating income at the end of the day is inflated. So we need to make sure that that's accurate. We verified the rent amount. So are the residents actually paying what the seller said they're paying? We also looked at like concessions. So is the seller giving like 3 months free rent? Like we checked all of that. And then we looked at kind of turnover. We wanted to understand the number of tenants that are staying versus those that are leaving. And then after we looked at the rent roll, we looked at, because rent roll is income and then other income, which I'll talk about. But then we looked at the expenses. So that was the T12 that I talked about. So what happened the last 12 months? We looked at that. So from November to last November of operating costs, we took a look at that. We sampled invoices to make sure that the expenses are accurate. And one thing we did is we looked at vendor contracts. And the reason why it's important is because we want to know what in expenses, we want to know where the costs are coming from, but we also want to look at some contracts that we might not continue, ones that we need to cancel, that maybe our property management team that we're bringing, maybe they don't think that we need that, or maybe they have their own or a different way to manage the property. So we look at those to see what contracts are on right now, what we're going to continue, and what we're not going to continue. We looked at expenses, insurance costs, tax bills, all of those things. We looked at it to make sure that it's going to be steady when we take over. And then we looked at kind of like rent trends and collection. This is so important, right? Are the residents paying on time? What is bad debt? So bad debt is like if a resident doesn't pay, maybe month after month, right? Have they started filing eviction process? Where are they? If the residents are delinquent, what does that look like? And then we also looked like streams of other income. So thinking about pet fees. And so one of the things we're doing is we're going to put a dog park, right? We found a part that's unused space that we're going to put a dog park in. So then thinking about like, do they charge any pet fees? And when we go into every unit, right, we look for like, is there a dog? Is there a crate? Is there dog bowls? Like stuff that maybe the resident did not tell us. Like we look at that and we kind of mark that. So we looked at like the laundry site, because about 90 something units have washer dryer. So we looked at the laundry site because we'll be collecting other income from there as well. So all of that is like the financial part. This is not the fun part, but this part is so important. And it matters because like when the seller is trying to sell, right, the incentive is to make the property look really good, really pretty. And so sometimes they might even overstate like revenue and they might understate expenses. So we have to do the work, right? It is on us to verify and to make sure that all those numbers look right. And so like the picture that you see, that's one of our staff kind of really going through and starting to look at the process of reviewing rent rolls, expenses, all of that. Our job in the last 48 hours was to find the truth, because like our returns and your returns depend on what we find. So that's why it's actually really important. It really depends on the actual performance of the property, not what is in those fancy brochures that we saw when we were buying it. The financial due diligence is so important because like we strip away some of that optimism and like how pretty everything looks, and we really confirm what's real. So the reason we do it is because it's protecting you as we are purchasing this asset, right? We want it to not just look profitable, actually be profitable. And so that's why you're here. That's why you're listening to this. That's why this is important. And so the third one I talked about was operations. So like the quality of the people that are running the property every single day. And we spent time kind of with the on-site staff. I told you we walked with the maintenance crew. And so we're able to talk to them about the experience, how long they've been there, how they handle challenges. The front desk staff, while we were working doing the financial assessment, right? We saw residents come in because it's just another day. So like, were they responsive? How professional were they? Like, you know, something as small as like, do they know the residents by name is important. And then we kind of assessed the maintenance team, how they worked. They were fine. It was a joy to work with them. And we also looked like at, in terms of resident satisfaction or resident indicators, we kind of looked at the biggest thing is turnover and what retention rate looks like. You know, for us, we want to make sure that less than 5% is leaving. So what does that look like? Are residents renewing? Are they leaving? Because this is the truth, right? You can have a really pretty property, and this property is pretty with really strong financials. But again, if the day-to-day staff, if the management team is weak, that's gonna bleed into the performance, and the performance it'll deteriorate. So that's why this is so important, right? Good management, again, will increase retention. It will decrease turnover. And it's as an investor, this is something you should know, right? It's cheaper to retain a tenant than to go and find a new tenant, right? So that's how we have to just be thinking about in terms of who we want on site. Because the tenants, again, they interact with the on-site team, the management, you know, the maintenance guy, all of that. So it was important that we really spend some time really digging into this. And then the final piece was the market validation. And that was kind of understanding everything around it. So a small team drove the property, drove the market, drove the area yesterday. We reviewed 3 competitive apartment complexes, and we secret shopped 2 of them. And so like that just meant we acted as the tenant, and we wanted to learn about those properties, like how they were doing, what the rent was on those properties. Those are some of the questions that they asked. They drove the area, like, and then we also compared it to like what we are charging, or how aggressively we can increase rent. All of those things, we're thinking about it by checking out what's going on in the area. Are we competitive? Do we have room to grow? And like what's, because some of the things you ask as a new tenant, you ask, well, how much is it? Who's in the area? How full is the apartment? All those things, we're asking. We looked at whether there's new construction in the area. Are there any new apartment complexes that are coming up? So those are things that, even though we know, we've done the due diligence on paper, it's still good to see it, to drive it and to see, did we miss anything? We looked at, like employment centers, what's in the area. Again, I told you we looked at grocery stores, school districts, all of those things, restaurants, amenities, how close it is to the property, what is going to make our property shine even more. And then another thing is like driving, even for every single one of us, right? Driving from maybe center of Atlanta to the property, how long did it take? Because a lot of our tenants might work in downtown Atlanta and commute to Covington. So, and then a team actually went to look at like the Rivian EV plant, where in development it was. So all of those things are why it's important, why the location is so important. You can execute perfectly on property management, but if the market is bad, right? If what's around us isn't growing, the returns are going to suffer. So these are some of the things that we looked at, right? That we need to really understand. That we really need to understand as we are thinking about buying. We need to know like the submarket that we're in. Is it resilient? Those are some of the questions that we were asking, because at the end of the day, right, the market is going to validate, and it's going to protect you from buying in the wrong location at the wrong time. So that's why why this is part of our due diligence. Okay, so now I kind of told you a little bit about what we found as I went through each of the things that we looked at, but this is really where some of our assumptions became evident. So with the physical condition, right, the park is very well maintained, park at Arlington. The units really showed consistent upkeep. There's some areas that we need fix up. So we put up on screen, you see some areas that need work and that we're going to do it. There was some deferred maintenance, so some things that didn't get taken care of, but it wasn't significant. One of the big things is that we're going to have to do some window repairs. And so we looked at that, but we've already budgeted that, and we actually don't need to increase our capital expenditure budget. The building systems from the contractor. So just talking with the contractors are going to give us a full report. So within the next week, right, our property management team, the walking team, the financial team, we will all get reports from them, and we will also get reports from our contractors. So everything that we plan to do, that's why they were there. So like what we budgeted, we're going to match it to actual numbers that they'll give us. So that's what that looks like, right? Again, I told you the property has very strong curb appeal, and I saw that, like, it looks like a place that I would want to live. Like I just really like the garden style apartments, the brick, everything about it was just really pretty. And again, I told you the leaves were changing. That big park in the center, we are thinking about doing something to it. And so like, I think you can see like a little bit part of the gazebo, but we are thinking about maybe moving the playground, making a bigger playground, and moving it to the center. So like as kids play, like you can watch them from wherever you are. We're thinking maybe seasonal events like volleyball. We're just thinking about really interesting things. And while we were there towards the afternoon, right, we saw 2 school buses come to the area. So there are a lot of kids in the area. So we're thinking about like what we want to do. At the end of the day, we didn't identify like any major capital expenditures other than some of the window repairs that we're going to have to do. The property is really cared for. It's not neglected at all. On the financial side, we verified the rent rolls. It's 94% occupied. We have the most recent rent rolls. The collections are strong. There is some bad debt on the property. And so it's something that we're going to, if they don't clear before we take over, we are aware of it, and we will know how to attack it when we get it, but it is not significant at all. And the expenses kind of aligned with what was projected. There are 2 contracts that were probably going to end. And so we looked at that, we confirmed that. But again, the official reports will be out within the next week and a half. Revenue has been consistent. So the numbers that we're seeing, occupancy is where it is. It hasn't declined. The management team on site, they were great. So before we officially buy it, right, we will interview the on-site staff, and they'll get the opportunity to maybe come on staff with us, or maybe go elsewhere. So we will go through all the interview processes. We'll kind of figure out, we'll do our due diligence on them, because like this circuit of like property management and apartment housing is small. So we'll figure out like how they are and if we want to retain them. But all of these things are things that we did yesterday, today, but it'll be ongoing. But the physical work we did the last 48 hours. And so now you're asking, like, what do these findings mean for me as an investor, right? What does this mean? So the operational risk is low. Our business plan, our big business plan, is value add. And so that means that part of our plan on appreciation is to go in and do renovation on the classic units, the units that were 2001, what they look like. So we're going to go in and we're going to do renovation, and we'll be able to renovate 100% of the remaining units that haven't been renovated. The seller has renovated some, and he's gotten significant increase in the value of the property, and so he's selling for a good basis. And so that's our business plan. I told you there's no significant capital expenditure other than just some deferred maintenance, but that's going to happen. The property is 2001, so that's expecting, but there's nothing major that is really going to drain cash flow. We've set aside money for the windows, and so the revenue base is stable, and we verified that. There's no major, again, I told you there's no major delinquency that we're going to have to attack. The management team that we saw on site was really good. So we're not inheriting, like, when we still have the choice, but it's not, I don't think that we're going to have to replace any of them if they decide to come on staff with us. And so in the kind of upcoming months, our property management team, again, will kind of go through the staff on site and make sure that, like, those are the people that we want to start working with us when we officially close. Now, secondly, is kind of, I would say, one is that low operational risk, and the second is just predictable performance. So what we underwrote on paper, like what I've shared with a lot of you on this call, we verified it. So the expense structure is consistent. And this is important, I want to share this with you, right? As we acquire more property in the Atlanta area, right, we have some cool ways to decrease expenses because we're using the same property management team. So all of that is actually in our favor. So just being able to kind of think through that with our property management team, we did some of that yesterday towards the end of the day. The most important thing I would think is that you should think about is protecting your capital. So the physical condition, what we saw yesterday and today, the asset has longevity on it. It's not going to deteriorate. And we are doing, before something happens, we're going to be proactive about that. And then the financials kind of showing the accuracy of that. It tells us that, like, the returns that we're projecting are stable, they're conservative, they're not inflated. They come from actual numbers, not optimism, because we're able to prove that. And all of that, the financial work is going to be completed today. And again, that report will be out. And so if you want to know a little bit more about that, please feel free to reach out to someone on our team, schedule a call with me. I can make that happen to just kind of update you on where we are. But this is kind of the bottom line, right? I want you to be thinking the capital that you are deploying is going into something that we have verified, an asset that we have verified, and it's not just projected hope anymore. So you can come, feel it, touch it, see it, but I've done that, right? And that is, I would say that's the difference between speculation and sound investing. And I said in the beginning that you should do your due diligence, but this is what it looks like, right? This is maybe, I would say, what makes passive investing really passive, because some of the surprises, now I'll say this, and I don't want to paint the rosiest pictures, right? There will be surprises that come that maybe we didn't see. That's why there's surprises, but we try to account for it. So that's why we have extra money in reserve for a rainy day or for something if something does happen. But that's what this looks like. It's verifying all of that, but also making sure that if something does happen, that we have enough for it. So I told you why kind of it's important, but I want to make it a little bit more personal, specifically to you, right? First, it's now truly, it feels truly like a passive investment, right? It's not, you're not buying a property that is going to require your attention every step of the way. Like if something breaks, like we will take care of it. And we have gone and seen that like there will be no significant major things. And we've accounted for all that we can. We've confirmed, kind of management quality, the systems that are in place, we like them. We like the culture, all of that we looked at. And now you could say like we can't see everything in 48 hours, but we started reviewing this property about a month and a half ago. And so like following that trend and then verifying it today and validating some of that, I think that's where the confidence comes from, right? And so we, as the ownership group and along with our property management team, we strongly feel this is an asset that like we will invest in and that you can invest in and you don't have to think about it, right? And then the second thing I think is so important is reliable cash flow. So going through and looking at verifying all the income, verifying the expense structure, making sure that all of those are not just projected, right? So that means that the distributions that we're targeting, the quarterly distributions that we're targeting, there's a high probability that we're going to deliver them because the property is already cash flowing. And I'll tell you a little bit about the property as we wrap up on what we did for due diligence. And then the third is tax efficiency, right? So this asset is verified, which means that like you will get depreciation, and the depreciation is real and it's substantial. So that means that like you're going to get stable income that will give you some planning certainty. And the biggest thing I want you to take away is kind of like thinking about long-term appreciation. And that is grounded in what we saw, the market, kind of how the property is being operated, the physical occupancy, the physical feel and look of the property, all of that. We assess that and we feel comfortable. And so the last thing is peace of mind, which is that the biggest thing is transparency, right? Transparency to see exactly what the condition of the property is today, and then making sure that you have the confidence in us, who will operate it and manage it for you. And then most importantly, that peace of mind is that your investment is based on evidence, right? We went there, I saw it, I toured the units, we had conversations with the contractors, with our property management team. We thought through kind of how we're going to bring in additional income to the property. So all of that were conversations that we had, and maybe we had before, but now we're like, okay, this is going here, this is going there. And so that's the difference between like investing with clarity and then just like feeling like, oh, I need to invest, but I'm not 100% sure. And you'll never be 100% sure about anything. But if you go in with like good information, with clarity, and then you can make the right decision, and it feels more like a calculated risk and not anxiety. That is what due diligence does for you. It makes that possible, right? You can then convert the idea of investing in real estate from just gambling into something that is a little bit more sound. And it's important because that's what we professionals do. So that's that for due diligence. I hope that was helpful. Please ask any questions. If something wasn't clear, toss it in the chat. But I want to take some time and just talk about the park at Arlington. And so in the last 4 years, right, with the partnership with a lot of you on the call, our awesome investor, our community, we've been able to invest and acquire in $120 million in assets under management. And we're just starting, right? The goal is to bring these institutional grade assets to our investors so that, it will be an opportunity for us to build wealth, to create wealth and build it together and then grow together. So that's what we're excited to be here. We're excited to continue this journey with you. And at that, I explained the importance of due diligence and I walked you through what we did at the park at Arlington. So I want to tell you a little bit about the deal. This is the park at Arlington. It is a 188 unit garden style community. It was built in 2001. As of right now, it's 94% occupied. It's not distressed. Now I can even say with more certainty and confidence that after due diligence, we are going in with a better idea of how we're going to manage the property better. So the current owner, they have about, they've invested about $8,700 in each unit in improvement, and they've been able to get that in, appreciation from the property. And so we have a proven method, and we're just going to complete it. So this investment is only for accredited investors. And right now our team is going to put up a link. So if you've heard about it, if you're excited, you came back because you're like, okay, now I'm ready to commit, just click on the link. And then it'll take you to the portal. You'll be able to create an account, and we will reach out to you kind of to talk you through it more detail, to answer any questions, to understand where you are, making sure that this aligns with you. So let me give you a quick overview of the investment opportunity. Again, this is the park. We're purchasing it for $33 million. And I've kind of shown you tonight that it's well maintained. We verified yesterday and today. Occupancy is at 94%, a strong resident retention. And the best part about this is that we're buying it with an assumable loan from the seller at 3.5%. Yes, I said it, 3.5%. If you looked at where interest rates are today, right, it's like 6 to 7% range in commercial real estate. And so we're getting half of that. That alone is worth its weight in gold, because truly means better cash flow from day one, just because of how low our interest rate is. And it means that, like, if rates go up, right, this is fixed, it's agency loan. And so our rates are going to stay the same. At the end of the day, it really does mean stronger returns. But that's kind of why when we do our due diligence, we confirm that and we make sure. So the reason why kind of this deal gets me really excited is because, first, the property itself is solid. It's not distressed. It's not falling apart. And we, along with the entire team, looked at it yesterday and today and confirmed that, right? People want to live there. The fundamentals are working well. And then layer it with like where it is, right? In Covington, the market is growing. The Rivian EV plant is going to build, and it's bringing massive demand. People are coming, jobs are moving here. Facebook's data center is already operational. That is billions of dollars in investment, and it's creating jobs. And when you invest in a place that has significant job growth, that means population is growing, people are moving there, people need a place to live. That is how all these fundamentals start kind of stacking on top of each other. And that's what the growth piece looks like, right? When it's all locked in. So again, we're buying the asset that it's already working, right? It's in a market that is, in the next 12 to 24 months, is growing significantly. We have a clear value add plan that the seller has already proven, and we're just continuing that renovation plan with every tenant that, with every unit that is, that the lease is up. We go in and we start renovating, and then we will bring it to market at a higher rent based on kind of new everything in the apartment. But on top of that, right, we're doing financing. We're using amazing financing today that we would never be able to get if we got fresh debt. So that's what all of that looks like. And that's why we really love this property. And this is what you're going to earn. A lot of investors ask. So cash flow looks like 6 to 10% per year, and that is paid quarterly. So that looks like real money that's coming into your account every quarter. And then for the tax benefits, it looks like about $45,000 in deductions per $100,000 invested. And that's information that we've gotten from the cost segregation that we're planning on doing on our accountant. But this is truly dependent on your investment, and it's going to vary with each investor. And then appreciation, thinking about like after we execute our renovations, as the jobs arrive and as the market grows, right? Conservatively, we're going to hold it for the next like 5 to 7 years. But really our plan is 5. And in that, we're estimated that it's going to grow. The property is going to appreciate in value anywhere from like 15 to 25%. And in total, kind of the returns that you're looking at is maybe we're projecting around 15 to 17%. That's yearly returns, and that's conservative, but we want to make sure that our projections are realistic based on the underwriting, based on the assumptions that we make. And if it does better, right, that appreciation will come to you, so you'll benefit from it. But kind of conservatively, where the market is, where it will be in 5 years, when we plan to sell, we think we're going to get those returns. Minimum investment is $100,000. Our value add strategy, again, I've talked about it, but I want to make sure that it's clear, you understand it. It's straightforward. The goal is operational improvement. So like if something needs it, we'll do it. Where we see an opportunity, then we're going to plan to do upgrades over time as leases are up. So one question I got from an investor was like, are you going to do all the renovations like year one? The answer is no. So we're looking at doing about 4 renovations every month. So it's not significant. We're not disposing tenants. Is as leases come due and they don't renew, then we'll go ahead and do renovation. But all that I've shared with you tonight about kind of the due diligence is, it's not just the process, right? It's the foundation for this opportunity. So I'm not asking you again to hope that the property performs, right? I want to show you, my goal today was to show you step by step kind of how all of that data is positioned to deliver the returns that we talked about. So if this aligns with where you are, what you're thinking about your wealth building goals, and the next step, you might be asking like, what are the next steps, right? The next step would be to review the full investment summary. So again, my team's going to put up a link on the screen. Click on it, jump into the portal, and it's non-committal, right? So you create an account, and then we will reach out to you. So that will start the investment process. We'll reach out to you, schedule a call, and be able to answer any questions and walk you through the entire process. But more than that, also kind of think through your timeline, your objectives, what you want to get out of this, what the process looks like. And if all of that aligns, then you go ahead, commit on the portal, wire the funds. And so that's something that's kind of the next step. I'll say this, right? Some people ask about how they can invest. So you can either invest with cash or you can invest with a self-directed IRA account. And we have a custodian that will kind of walk you through that. So an old 401k or an IRA account can be converted into a self-directed IRA, and you can use that to invest. So that's something that some investors don't know. And I want to make sure that you are aware of that. So before we move on to questions, as we wrap up, and I hope some people have questions, I wanted to just tell you kind of why this is important, why due diligence is important. And again, I said it in the beginning, and I want to say it here. Whoever you are investing with, right, you need to make sure that they're doing due diligence, this level of due diligence. But this is how we operate. Really, in the last 48 hours, our goal is to run institutional quality due diligence on every single asset that we buy, every single asset where you are putting capital, because your capital really deserves that same kind of rigor that others are doing, right? So we want to make sure that we communicate very transparently. So before the investment, during the whole period, and when it's time to exit, right? All of that, those things, we want to make sure that we're talking to you. Again, we underwrite very conservatively because we are more interested in protecting your capital than aggressive projections. And those aggressive projections might not materialize to anything. And so this is kind of my commitment to you, right? I want to make sure that you know that the capital that you're investing is treated with the same discipline we use for our own as we invest. So we want to take away the surprises, and we make every decision with our investor first mindset. So we want to make sure that you are at top of mind in everything we do. And that's why we make sure that like we get on a call with you to know what's important to you, what your goals are, and how this aligns with everything. And so at the end of the day, that's why rigorous due diligence is important. And it's not just our process, right? It's the promise that I want to make to you to make sure that your capital is being stewarded in everything that, like in every deal and every investment opportunity that we embark upon, that we acquire, because I think your capital deserves that. So I just want to say thank you. Thank you for spending this hour. I want to say I'm grateful for our investors who have partnered with us. And as you're thinking about partnering with us on the park at Arlington, I just want to say thank you. And I will open it up for questions. So if you have any questions at all, please put it in the chat. I'd love to answer it, and then we can take it from there. And that's all I got. This is the QR code. So if you want to get on the portal, this is an easy way to just get on it. Okay. So I will, let me end screen share so we can pull up the questions. Okay. Will the rent increase to cover the repairs? Okay, this is a two-part question. It's not a two-part question, but I'll answer in two-part. So the rent will increase based on two factors. The rent will increase just based on kind of organic appreciation in the market. So like as rents go up naturally, if you remember, if you've ever lived in an apartment, maybe every year the rent increases by $20 or $50, right? That's just natural. And so that's organic, what we call organic rent growth. So it's growing that way. And then when we do renovations, right, that's when we will then increase rent. Now, we increase rent kind of, we're increasing in general all the income that's coming into the property, but we do have money set aside for repairs and renovations. So that money is already set aside even before we start running, after we acquire it and we start managing it, we have all of that money set aside as well. But the goal of owning this asset is that we want to increase the value over time, and it's through appreciation. And one of the ways is repairs, or it's renovation. I hope that answers your question. What is the minimum investment required? The minimum investment is $100,000. I've gotten this question a lot from a lot of our investors, but I would still say, have a call with me. Let's figure out where you are. Kind of if that amount might not be what you're thinking or you want to start, jump on a call with one of our team members and we'll kind of see where you are, where your goals are, and figure out what works for you. Hi from Maryland. Okay. Are there any other questions? I love the questions. Don't be shy. If you have any other questions, I'll hang out a little bit. We still have 5 minutes. If there's anything that maybe you want me to go through, or no question is small, a lot of this information is brand new to some of the people on this call. So if there's something that you want clarification on, please feel free to ask. Okay. If there are no questions, I will give you back 4 minutes of your time. I want to say thank you so much to those who stayed all the way to the end. I'm really grateful. I hope that you learned the process of due diligence and why it's important. But again, right, I'm excited for everyone who is going to be joining in on this amazing asset, the park at Arlington. Feel free to reach out if you have any questions. We'd love to connect with all our new investors or potential investors, and even our longtime investors. So everyone have a wonderful evening. Thank you so much.